This is Nightly Business Report with Tyler Matheson and Susie Guerin. Brought to you by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our dividend stock advisor guides and helps generate income during a period of low interest rates. Real Money helps you think through ideas for investing and trading stocks. Action Alerts Plus is a charitable trust portfolio that provides trade-by-trade strategies. Online, mobile, social media. We are TheStreet.com.
Stocks may grab the headlines, another triple-digit gain today, but the real action lately has been in the bond market. And the question now is, what do you do if treasuries are a big part of your portfolio?
They're back. Home repossessions are on the rise. But if the housing market is recovering, why are more people being forced out?
You're going to have to pay $25 to see the next Iron Man, and you're probably only going to have to pay $7 to see Lincoln.
Steven Spielberg and George Lucas, two men who know a thing or two about the summer blockbuster, say big changes are coming to Hollywood, and as he just indicated, it's going to cost you. All that and more tonight on Nightly Business Report for Thursday, June 13th.
Good evening, everyone. A good day for stocks thanks to good data about the U.S. economy. Investors shrugged off news of another big sell-off in Japan's stock market and focused instead on upbeat developments here in the U.S. Retail sales rose 0.6% in May, more than expected, and the biggest increase in 3 months. Fewer Americans than forecast filed applications for unemployment benefits. Those first-time jobless claims fell by 12,000 last week to a near 5-year low. Also, some merger and acquisition news inspired stock buying, and we'll have more on that in just a moment. By the closing bell, the Dow jumped almost 200 points, ending above the crucial 15,000 level. The Nasdaq added about 45, and the S&P rose by nearly 24 points. Even bonds rallied today, despite disappointing demand for the government auction of U.S. treasuries. Yield on the 10-year note fell to 2.15% on hopes that the Federal Reserve will continue stimulating the economy by buying bonds.
So what is going on with bonds? Sure, they did rally today, but returns on bond funds and ETFs fell in May, between 2 to 3% for most of them, and others tumbled by as much as 8%. So let's get some answers now from Robert Rowe. He's co-head of U.S. fixed income strategy at Citi. Robert, welcome. Good to have you with us. I think an awful lot of bond fund and ETF investors are very surprised. They don't know what to do. This is the kind of market they haven't seen in a long time. What are you telling them?
That's true, Tyler. I mean, I think that volatility has certainly picked up in the bond markets. I think since the beginning of May, we've had roughly a 50 or 60 basis point sell-off in 10-year rates. I think that, essentially, as far as we're concerned, that's not necessarily as a result of moderate economic growth, but also jitteriness on the part of investors thinking that perhaps the Fed tapering will not go as smoothly as the Fed probably expects. Right now we peaked at about 220. We have seen a little bit of a rally right now, but certainly we've reset to a higher rate level.
You know, Robert, so many people have said that we are in a new period in terms of how we look at bond investments versus stock investments. In the paper today, when I opened up, USA Today has a headline saying bond funds take a beating. The New York Times says bond investors think a Fed pullback is real. And then there was a report from Guggenheim Securities saying that treasuries are a Ponzi market. I mean, a lot of negative news out there about bonds, and yet investors still are holding on to their bonds. When do you see that big shift going to happen?
Well, I think we did see a bit of a shift at the end of the month in May and in the first week of June, when there was roughly about 10 or 11 billion of outflows in the taxable fixed income market, and that's not even including munis, which also saw some outflows. We didn't see the commensurate inflow into equities, for instance, which would suggest to me that most average investors are getting a little defensive, and that's probably warranted here. I mean, I think our forecast for the end of the year is roughly 2.5 to 260 on the 10-year, so we could certainly see rates rise a little more. I think that would be commensurate with probably a faster pace of economic growth than we've seen so far. And remember that usually seasonally we see a bit of a lull here. So I imagine that the market's repriced a little bit, but that it could stabilize from here at least until the fourth quarter of this year. I think investors should play the fixed income market a little bit defensively here, though.
Well, that's what I wanted to lead you to, Robert, and you're starting to go there. If you see interest rates on the 10-year bond at 2.5%, 2.6% at the end of the year, what does that translate to for someone with a 10-year duration in their bond portfolio in terms of principal loss, number one? And how do I take cover? If I want to avoid some of that loss, what should I be doing? What is the defensive strategy?
You know, I think you could see another, if you're just talking about principal loss, you could see another % or 2 of losses on a market value basis. And certainly when yields are this low, that doesn't make for a very good total return. So at least within the context of the fixed income markets, I think shortening duration here probably makes sense. When you think about the fact that the market sort of priced an earlier move by the Fed, second half of 2014, we would probably think of that as a moderately low probability event. Then probably 2 or 3 year maturities right now probably present some value. Remember that the market, though, is extremely jittery about how the Fed may have an exit strategy, and that's also had a knock-on effect with credit spreads as well.
Well, we will hear more from the Fed next week, won't we, Robert? Thank you very much. Thank you very much for being with us. Robert is co-head of U.S. fixed income strategy at Citi.
The Supreme Court today deciding who can own the rights to the fundamental building blocks of life. The decision that human genes isolated outside of the body cannot be patented is already having an impact on the big business of scientific research and medicine. Bertha Coombs has more.
Myriad Genetics' BRCA test is what alerted Angelina Jolie she had a high risk of breast cancer because she carries the BRCA1 gene. Myriad had patented the BRCA1 and BRCA2 genes in the course of developing the test. The Supreme Court unanimously struck down those patents. Justice Clarence Thomas writing, DNA is a product of nature and not patent eligible merely because it has been isolated. Polywog portfolio manager Les Funtlater calls it a win for innovation.
It's going to allow smaller companies and scientists to develop new tests without fear of reprisal from monopoly. And ultimately, those will find their way into commercial use.
Myriad CEO hailed the decision in a statement saying, "We believe the court appropriately upheld our claims on cDNA, ensuring strong intellectual property protection for a BRCA test, a test which represents 75% of Myriad's total revenues." Investors initially sent the stock to an all-time high after the court ruling, but by late afternoon, shares fell. As Quest Diagnostics said, in the wake of the decision, it now plans to offer a BRCA1 and BRCA2 test later this year.
There will probably be some other laboratories that will be offering tests, and I think all the laboratories are probably going to shift to not just testing for these 2 genes, but a much larger number of genes that can also confer inherited risk of breast and ovarian cancer.
But Piper Jaffray analyst Bill Quirk says Myriad's test has set a high bar.
You need to know what all those mutations mean. And without the benefit of having a database, which Myriad has and which a competitor at this point would not, it's going to be really difficult to argue that a, say, $800 competing product is even equivalent to their $3,000 test.
But clearly the door is now open for other genetics testing firms, and consumer advocates say ultimately that's a big win for patients. For Nightly Business Report, I'm Bertha Coombs.
We begin tonight's market focus with a $1.5 billion deal. Gannett is buying the television company Belo in a move that makes Gannett the country's 4th largest owner of major network affiliates, reaching almost a third of U.S. households. The CEO of Gannett says this is just another step in the company's transformation. Both Gannett and Belo really soared on the news. Gannett closed up 34% to $26.60, and Belo rallied 28% to $13.77. Well, DuPont issues a weak forecast and blames the weather. Chemical maker says its profit's going to fall more than expected in the first half of this year, citing a wet spring in North America and Europe that has hit its agricultural business. At the close, DuPont ended off a fraction at 53.88.
Eli Lilly out with positive news for arthritis sufferers. The company said its experimental drug was effective in reducing painful symptoms associated with rheumatoid arthritis. Shares of Eli Lilly rose slightly to $51.85. And Coty fails to impress investors in its stock market debut on the New York Stock Exchange today. The perfume maker, whose brands include Calvin Klein, Davidoff, and Chloe, raised $1 billion in its initial public offering, the third biggest IPO of the year. But concerns that its products are too dependent on U.S. and European markets may have capped investor enthusiasm. Shares finished the day 14 cents lower to $17.36.
Well, rising home prices are a good thing for everyone, right? Well, not always, it turns out. Now that values are going higher, banks are working through delinquent mortgages faster, eager to repossess them, put them up for sale, and turn their losses around. Diana Olick has our report tonight.
Hi, Michelle. How are you? Great. How are you? Good to see you.
Michelle McNair is not behind on her mortgage yet, but she is at the end of her financial rope.
I'm hoping to get my mortgage modified, the interest rate to go down, and maybe possibly the principal balance to go down. And just kind of playing with numbers myself, if that could happen, it would be in a more affordable state for me.
Otherwise, she says she will default on the loan and possibly lose her Maryland home. But Michelle's timing isn't great. New foreclosure filings in Maryland are up over 200% from a year ago after years of delays from new state foreclosure laws.
The surge is really a result of banks getting their systems back into place after years of having a sort of moratorium on foreclosures.
Nationally, banks had been modifying loans more aggressively under a major legal settlement last year, but most have fulfilled their commitments and are now ramping up foreclosures. That and the fact that home prices are now rising faster than expected, up over 12% from a year ago, according to CoreLogic, due to low supplies of homes for sale.
That gives the banks more incentive to go ahead and foreclose on these homes because they know they can turn around, sell them quickly, and for a price that's higher than what they would have been able to sell them for a year ago.
While overall foreclosure activity is down from a year ago, bank repossessions, the final stage of the process, jumped 11% in May from April, according to RealtyTrack. 33 states saw the rise, with some quite dramatic. As banks take back more homes, they'll of course put them up for sale. That will ease the tight supply situation we have in the market now, but it'll also ease the big price gains as supply finally rises to meet demand. For Nightly Business Report, I'm Diana Olick in Washington.
For more on bank repossessions, go to our website, nbr.com.
Still to come, why travelers may be in for a summer of discontent at the airport. But first, a look at the biggest gainers on the Dow today.
eBay's PayPal service wants small businesses to throw out their old cash registers and install its computerized online payment system instead. And it's making it worth their while. Mary Thompson has more.
That is the sound of money, a sound online payments giant PayPal wants to quiet, if not silence, by lowering the volume of cash payments.
So ultimately, it's about trying to effect a transaction between a consumer and a merchant that's valuable, but doesn't require a whole change of how you do business.
PayPal's Vice President of Global Products, Hill Ferguson, is leading its push into the brick-and-mortar world with a new point-of-sale technology called PayPal Here. It lets merchants of all sizes accept cash, credit, and debit payments, along with those made by PayPal's 128 million clients over their mobile phones or computers.
The challenge, getting retailers to give up their old registers for something new. So to persuade them, PayPal's offering to waive $20,000 in transaction fees for the first 10,000 merchants who convert.
The payment arm of online auctioneer eBay isn't alone. Both Square and Groupon recently debuted cash register alternatives looking to cash in on a growing cashless society. Cash is still popular, accounting for half of all transactions in 2010, but that's down from 80% in 1960. Given PayPal and rivals earn a transaction fee for each payment made through their service, less cash means more revenue. Hill maintains PayPal here could mean the same for small businesses like a restaurant. The online orders and payments cutting time taken to make change or write a receipt and giving the merchant more time to make another sale.
My lunch hour customers can place their orders when they're a couple blocks away and come straight to the line and grab it and go and not have to mess with cash in that transaction. That's a big benefit for me as a service operator.
An added benefit of PayPal here, it creates a client history of purchases and preferences cash payments don't, giving the merchant a chance to service a client like a king without the cash. For Nightly Business Report, I'm Mary Thompson.
One day before presidential elections in Iran, Google says its Gmail service there has been hacked. The search giant says it had to block a massive phishing campaign that sent a barrage of phony company emails to tens of thousands of Iranian customers in what the company believes is an attempt to influence the outcome of Friday's election.
And with an eye on those Iranian elections, the U.S. government recently eased up on tough economic sanctions against that country. They are now allowing American companies to sell mobile phones and other devices in Iran in hopes of empowering citizens there to speak out against the government, similar to the Arab Spring uprising. Michelle Caruso has more.
The new announcement from the Treasury and State Department means U.S. companies can now sell a whole host of communications products to Iranian citizens without first getting special permission from the U.S. government. Mobile phones, SIM cards, modems, satellite dishes, laptops and tablets, and even anti-tracking and encryption software. The most immediate impact will be seen in software updates for phones. A senior government official tells us Iranians complain the sanctions prevented them from updating apps, so they were using older and slower versions of Twitter and Facebook. A senior U.S. official told reporters this general license will empower the Iranian people at a time when their government is steadily intensifying its efforts to stifle their access to one another and outside information. But supporters of Iran's dissident movement are skeptical this move will make any difference in giving Iranians more freedom.
I think the problem in Iran is not that people need phones or don't have technology. The problem is that the regime monitors, all their activities because it controls the communications networks and it uses equipment and surveillance to monitor people.
In 2009, the victory of Mahmoud Ahmadinejad was disputed, leading to large protests and violence in the streets of Tehran in what was called the Green Revolution, though there was no regime change in the wake of those protests. For Nightly Business Report, I'm Michelle Caruso Cabrera.
And back in the U.S., Apple is reportedly considering coming out with a cheaper iPhone later this year, retailing for just $99, along with at least 2 other bigger screens. The reason? To combat strong sales of less expensive models and ones with larger screens from rival Samsung. Apple, for now, declined to comment. And new government figures show that nearly 1 in 4 flights was late in April. The Department of Transportation says nearly 2% of all domestic flights were canceled, double the rate from the prior April. Airlines put the blame on furloughs of air traffic controllers and bad weather.
And here's another headache for travelers. Getting through U.S. Customs is taking more time, sometimes hours. What's the problem? Scott McCartney has been tracking this for the Wall Street Journal and joins us now. So, Scott, what is the problem? Why is this happening now?
The problem is there's been an increase in international travel and no increase at all for Customs and Border Protection officers at airports. So you have a shortage of officers, very long lines, extreme waits, people missing connections, and just a big mess.
Scott, in today's Wall Street Journal, you describe 3-hour waits when people have gotten off of sometimes 10, 17-hour flights from overseas. They're waiting to go through those lines there. Where are the waits the worst and why?
Well, the big hubs are taking the biggest hits, and certainly at peak times. Miami is sort of ground zero for this problem. The airport has had to take an auditorium and put 1,000 cots in there for people who are stranded overnight because they've missed connections because of those 3-hour lines. New York JFK is bad, but we've seen waits double at Dallas at different times of the day, an hour average wait in San Francisco. So it's all over the country. And, the basic in the spring, what we saw were waits that really were summer-like. But this started last summer with increases, and some of it's because CBP, because of sequestration, hasn't been paying overtime for those peak periods this spring, and some of it is just they've essentially had a freeze on officers for 3 years and a lot more travelers.
And you just raised a point that I was going to ask you about sequestration. I mean, one way to solve this problem is you hire more people, or you add more staff. Is it because of the federal government is cutting back on jobs that this has been created, or something else?
No, this certainly started long before sequestration, but I think it has exacerbated the problem. Airports are complaining, Los Angeles, Miami in particular, that they're not getting overtime. They're not getting additional officers at peak periods, and that's a real problem. CBP says they've actually dealt with sequestration by making cuts elsewhere. Part of the problem is airline schedules have spread out, so now they have busy periods in the early morning or late at night, so that's hurt the peak periods. But also CBP does say they have held back on overtime in anticipation of this summer. So they've not spent the dollars this spring, stockpiling for summer, and we hope that helps.
I'm assuming this is bad for U.S. citizens, probably worse for non-U.S. citizens, but let me ask you, you described some programs that can help you get around or mitigate some of these long lines. What are they, and what do they cost, and how do you sign up for them?
Yeah, you're exactly right, Tyler. There are longer lines for non-U.S. citizens. It really hurts visitors to the United States more than U.S. citizens. The best program, really one of the best government programs going, is called Global Entry. It's a trusted traveler program for U.S. citizens. You pay $100. You have to go through a background check, go for an interview with a CBP officer. But once you're in the program, you bypass the lines. You walk up to a kiosk. You, on a touch screen, answer the questions. Put your fingerprints in the machine, you get a receipt, and you're on your way. It's a terrific program. It also gets you into TSA's pre-check program, so you get expedited screening at TSA checkpoints as well. You can apply online. Applications have surged, the CBP says. There are actually long waits now for interviews because these long lines have produced a lot of interest in the program.
Love that.
Sounds good to me. I'm about to sign up. Global Reentry. Scott McCartney of the Wall Street Journal, thank you so much.
Good to be with you.
And coming up on the program, two of the biggest names in Hollywood are predicting a major script rewrite in the movie business. We'll hear from Steven Spielberg and George Lucas next. But first, let's get a check on commodities, treasuries, and currencies. A big victory for the Triumph. You may remember the Triumph, the ship that broke down in the Gulf of Mexico in February, stranding thousands of passengers at sea for several days. Well, now the Triumph has been cleaned up, fixed up, and is back in service, setting sail from Galveston, Texas this morning. And Carnival says the Triumph's first two cruises are already sold out.
Finally tonight, how much would you pay to go to the movies? Julia Boorstin spoke with legendary directors Steven Spielberg and George Lucas about the future of Hollywood, and they say you're going to pay a whole lot more.
Steven Spielberg and George Lucas predict total upheaval in the movie business.
And there's going to eventually be an implosion or a big meltdown. There's going to be an implosion where 3 or 4 or maybe even a half a dozen of these mega budgeted movies are going to go crashing into the ground, and that's going to change the paradigm again.
Spielberg compared the implosion he expects to the 2008 stock market crash, saying the industry will come back stronger but totally different.
And eventually there's going to be there's going to be a price variance. You're going to have to pay $25 to see the next Iron Man, and you're probably only going to have to pay $7 to see Lincoln. I mean, that is going to be in our future as well.
And they will sit in the theaters for a year, just like a Broadway show does, and that's going to be what we call the movie business. But everything else is going to look more like cable television on TiVo. What you're going to end up with is fewer theaters, bigger theaters with a lot of nice things. Going to the movies, it's going to cost you $50, maybe $100, maybe $150.
Like Broadway costs today.
Yeah.
Spielberg and Lucas predict a paradigm shift towards the living room, where nearly all content will be available on demand through devices like Microsoft's new Xbox One. Spielberg's partnering with Microsoft on a live-action show based on its Halo game, which Microsoft's Don Matrick says will tap into new technology.
Having the ability to use a controller, having the ability to touch a piece of glass, whether it's your phone or your tablet, all of those things working together simultaneously will change the toolbox for creators.
With so many new tools, Spielberg and Lucas stress the importance of filmmakers still focusing on the story. As for George Lucas's most famous story, Star Wars, he says it's in good hands at Disney, which now owns Lucasfilm.
I think they've got the right idea beyond what anybody else is trying. They're the only company that has brought in smaller, more boutique companies that are focused on a particular thing and are very good at it, rather than trying to be everything for everybody.
For Nightly Business Report, I'm Julia Borston in Los Angeles.
Would you pay $150 to go to the movies?
No, I can't imagine it. And the only movies I go to, because I have a 7-year-old, are ones with talking animals. So, and certainly not for one of those.
But, you know, I remember paying $1 for a movie, and we were shocked when it hit $10, and then it got to $12. So maybe we will adjust to 25 or 50.
And interesting that Spielberg said that it was going to take a big crashing downer like Ishtar to make this transformation come about.
We'll see. Stay tuned. That's Nightly Business Report for tonight. Thanks so much for watching. I'm Susie Garrow.
And I'm Tyler Matheson. Thanks from me as well. Have a great evening, everybody, and be sure to log on to our website, nbr.com, for more. We'll see you back here tomorrow night.
Nightly Business Report has been brought to you by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our Dividend Stock Advisor guides and helps generate income during a period of low interest rates. Options Profits helps educate beginning and seasoned options traders. Action Alerts Plus is a charitable trust portfolio that provides trade-by-trade strategies. Online, mobile, social media, we are TheStreet.com.
I'm Susie Garrow with a Nightly Business Report news brief. Stocks rallied today on strong economic data. First-time jobless claims dipped to a near 5-year low last week, and retail sales rose in May by a better-than-expected 0.6%. That sent the Dow soaring 180 points higher. The Nasdaq added 45. The S&P rose by nearly 24 points. USA Today publisher Gannett is buying local TV station owner Belo for $1.5 billion, reaching almost a third of U.S. households. Foreclosures were up in April as banks repossessed more houses as home prices rose. Apple is reportedly gearing up to make cheaper iPhones and ones with larger screens. And Microsoft is opening up 500 boutique shops inside Best Buy stores just in time for the holiday shopping season. Be sure to tune into Nightly Business Report right here on your public television station.